And good morning, traders, and welcome back to the XM Live. One of my favorite sessions, mobile trading, guys, trade on the go. And what can I say that you couldn't see right yesterday? Uh, I will show you something that I did yesterday. I think it was the best analysis for gold that you could see really in a while. So if you were following my sessions, guys, yesterday, and effectively, you know that I was waiting for a drop towards 70.90, right? And that was basically, sorry, 37.90. That was gold, of course. And yesterday I did the analysis, guys, literally on gold before, of course, the move happened, because for me the only proper way to warn traders about the move is to do actually the analysis pre-fact. Okay, after the fact is good because you can show the result. It's great thing, but before the fact is important if you want to have consistency in explaining and showing traders what they can do, and maybe guys, many traders take those trading ideas as kind of for their trading setups, if I can say it like that, right? So there was a trading signal from my part with my megatrend for me, right? Because my megatrend hero method gives me those trading signals to trade markets in between 5 and 6, 7, sometimes 10 trades per day. And I saw that it could happen also on my megatrend hero gold. And this is what happened yesterday. So, guys, if you go to community app, if you have the possibility to access the community app, you go find me here, for example, uh, and you see every day I do some analysis. Yesterday, and guys, look, these analyses that I do are valid for literally, guys, day. So this is daily, and it's every day. It's new setup. Okay, so that's what I want to stress out as important. Every day is new setup. I'm not longer term trader. I'm intraday trader. So today we might be going up. Yesterday we might be going down. I mean, bearish, bullish. It changes day per day. Yesterday analysis. Look at this, guys. Every single explanation of my analysis, right, on XM Community app, and here, guys, you can see the levels that I posted. All right, these are levels that I posted and the entries, guys, that you could make. So at the time when I was publishing the analysis, you see where the market was pretty high, right? So you can click here and you can even, guys, see the exact picture, right? So you can see the market was at 38, 50, 60 when I was posting the analysis. And after the analysis, it went down to every single entry point here, marked with yellow lines, going ultimately to the 37.90 zone there, and then made a pullback higher. So that was the analysis, guys, that we did yesterday. And I hope, guys, that you enjoyed it. Many traders actually mailed me and they thanked me for doing this analysis because they made a lot of money on this, guys. Because look, it's pretty clear. So you can use, of course, XM Community app also to see those trading ideas. At least my trading ideas are always the same format. I'm very precise, very clear with the explanation where we could expect and the market to move and the market to actually give us entries and potential exits. All right. So under community tab here, look, guys, under community tab, guys, you have basically trade ideas subsection, and there you can read the analysis. All right. Now let's move on. We go to mobile trading now. It's actually very easy. I use iPhone. I guess that you might be using Android, whatever, but I like iPhone. Honestly, guys, I switched completely to Mac. I'm using MacBook, iPhone. Honestly, I it's even better. than Windows. For me, just much better because on XM website you can also download the XM MT4 and MT5 for iOS. All right, not native application on App Store. Don't use it. XM own application is much better than that which you can find on App Store. It's completely integrated into the iOS, and it does exactly what actually Windows version was. So there is no any single drawback of using Mac version, right? So you can see here my iPhone, right? So that's how I trade. Right. So let's try to find some potential trades, guys. Yen crosses were on the move. We are going into, oh, look at this. Look at this, guys. What a drop. Australian dollar yen. Huge drop. We are getting close to the extreme levels, guys, here on yen crosses. Now, the question is, should we make any trades, guys, or should we wait for some counter trend trade opportunities? Now, if you want to trade this, I would advise, of course, one guy, as a guy who never sell at the bottom and never buy at the top. No matter what you think, I also think that it can be bearish, right? But I wouldn't trade, guys, myself, short trade when the market is extremely close to the bottom. No way, guys. So I know it is bearish, it can drop more, but the ATR has already been exceeded. So what should we do is actually wait for a pullback. There is a clear level here where we could short. So mark this level on your chart, this one. This is order block, guys. Look, this is order block. And because now the trend is so strong, we can completely neglect the role of the moving average right now, guys, because in order to have a perfect bearish market, moving average needs to go, both moving averages need to go below the EMA 89. All right. They need to go both below the EMA 89. And then when they go below the EMA 89, it means that they will be set for shorting. So look, on mobile here, I have also my Megatrend Hero moving averages, which are definitely, guys, 821 and 89, right? So moving averages which give me the direction and show me where the market might be going. So here, guys, both moving averages are above 89, but the thing is that 8 is above 21. So we have bearish momentum, but we still don't have bearish trend aligned because bearish trend will be confirmed when both moving averages cross below 89. So the alignment will look like 89, 21, 8. So 8 below 21, both below 89, which means, guys, that it's bearish. But because we have strong bearish move here, all right. Whatever happens, I will be trying to short Australian dollar yen here. All right. Unless, let's say, U.S. government makes a deal, Republicans and Democrats, to continue financing it, right? Because we had a U.S. government shutdown, and that reflected, guys, on the markets. That's why we see now accelerated move of yen to the upside. I mean, yen is gaining strength, while dollar yen is losing, of course, and all other dollar-related currencies are gaining. That's the impact of government shutdown. Dollar is losing the ground, right? Let's move on. Next one, Australian dollar, guys. Australian dollar, oof, Australian dollar was bullish. Look at these guys. This is the confluence spot. You see those moving averages on my screen? Look at these guys. They have like this, right? So it means, guys, that it's a strong confluence spot. They are converging at a single point. 89 EMA, 21 EMA, 89 EMA, 21 MMA. Look, they are converging there. And what happens now? When the market touches the level, it's automatic buy. How I trade, I don't, for majority of my setups, let's say 90% of my setups, I don't actually, guys, wait for the candlestick to close, because then we will be losing the time on, we would already lose pips if we wait for the candlestick to close. Some setups need to be done with waiting for the candlestick close, but majority of my setups, as I already said, guys, approximately 90% of my setups do not require any close of the candle. Rather, we go with confluence spots, which means, guys, I would be buying here. Like I showed you my gold analysis. Look, guys, as gold was dropping yesterday, right, all these yellow lines, buying spots, were actually meant to be where this is where we should be buying from, these yellow spots. And I mark those entries, guys, here on the chart. And then, guys, upside targets also. So you see, it means, guys, that we could effectively use these pullbacks to have multiple entries. And the same way I trade on my mobile, on my computer, whatever, I wait for the market, let's say, to come to this level. You see where my cursor is. And then I immediately open a position. So I don't wait for any candlestick to close. Because, guys, if you wait for the candle to close, what? I mean, you could be effectively losing pips that have already been made by smart money, right? So that's why I use this conference post. So far, it worked like a charm as I doubled my account from 5 into 12,000, 13,000. I will try to triple it. So my results are publicly open. I have account statements. So you could see basically how I do it. And I do it every day on XM Live. Okay, let's move on, Katian. Now we will try to find some entry positions. All right, we will try to find some entries. Also, guys, I use the ATR for exits, which means, guys, that we use volatility exits much better than anything else because we use certain percentages of ATR to effectively exit. We are, as I already said in the beginning, I'm intraday trader. So for intraday trading, we need to use the ATR. So if the ATR is, let's say, 60 pips, 70 pips, and we can take, for example, during London session, usual volatility 20%. So we go with 15 pip target. But during the US session, when volatility is higher, we can go with 40, 50% of the ATR. So we can easily try to set target for 30, 35 pips if there is volatility. If there is no volatility, you take what market offers you. So you cannot just rely on pivot points, supply demand levels, zones. No, guys. Intraday trading is about volatility management also, which means that if there is volatility, you take bigger percentage of the ATR because the ATR is the best indicator for measuring and gauging the volatility. If the ATR is high, then you have volatile market, and in volatile market environment, you can sometimes take 50 to 60 to 70 pips. And also, guys, important to say, don't go for risk to reward on intraday trading. You will just lose. I never go for risk to reward, and I managed to more than double my accounts every single time. Deposit and doubling the deposit in 2-3 period time. This account also that I trade, you can come to my session to I will show you the statement, whatever, guys. You see that I doubled it in 3 month period. So that's why I say it's somehow useless to go with old school approach. Someone was telling you that risk to reward is the only way you can win. No, it's not, guys. For intraday trading, no. For swing trading, yes. For intraday, no. You use volatility targets because you don't take what you want. You take what market wants to give you. And the market is willing to give you 40% of its ATR. That's what you can take maximum. Maximum. You cannot go above what market wants to give you because each market is different. Euro dollar is different to dollar yen. Dollar yen is different to pound dollar, which is different to pound Swiss and gold. Every market has its own ATR range. and you base your targets exclusively on the ATR, not on, I mean, you can use pivot points, levels, supply, demand zones, whatever you see, like, I don't know, maybe Fibonacci retracements or Fibonacci extensions, but it's not nearly as good as for intraday trading as ATR. ATR is the king of exits, like Megatrade Hero is the king of entries, right?